Hi everyone, welcome to another WiZDOM update. My name is Andrew Kubank and I have the absolute fortune of being one of WiZDOM's national directors. This video is number 8 in our Bank Secrets series, which is just a series of all of the things that we've learned that banks keep secrets from you guys over all of the decades that we've done business with banks. And we think that by sharing these secrets, a bit of a peek behind the curtain, understanding how they work and why they do the things that they do, can help position you to have successful outcomes from financial institutions, and of course, as a result of that, drive a better outcome for your property journey overall. So today's video, we're focusing on all the little things that you can do to improve your servicing position. And the reality is they're not going to tell you about this, because all of these things usually add up to a fair bit of work for them, but not necessarily any better financial outcome at all. So we can actually materially make a bunch of little differences to our loans, and as a result of that, improve our overall servicing position and make sure that we can borrow the maximum amount of money possible at any given point in time. So what I'm referring to is this. When a commitment is taken for one of your existing loans, the way that commitment is calculated is obviously a combination of a bunch of different things, and there are a bunch of different factors that lead into that. So what I'm talking about here is the amount, obviously, whether or not there's any redraw with that facility, what the interest rate is, whether it's variable or it's a fixed interest rate arrangement, what the loan term is, and that's a big one, and to a lesser extent, some other little rats and mice things that can be improved and changed as well. So changing these or improving those particular parameters, obviously, because the commitment that is used for the purpose of servicing is a combination of all of those things, if you improve all of those little things incrementally, whilst none of them might be sheep stations or make a massive difference overall, the reality is some of those little things add up. And when they all add up together, then the reality is that can actually drive quite a significant outcome. So look, in this video, it's not necessarily something that I wanted to delve into massive detail on each of those little bits and pieces. But look, I'll choose loan term because that's probably one thing that's worth talking about, which can have a significant difference. So look, we find all the time that customers, through whether it's situation or whether it's being busy with other things or whether it's a case of, the interest rate was always competitive, quite often, customers come to us and they actually have had loans running for a really long period of time. I mean, we all know that typically a home loan's provided on a 30-year loan term. And sometimes these investment loans are even their own personal loan. They've never had a situation where they've had to refinance or, get a different interest rate or provide a new loan term or get a different amount of money. And as a result of that, the years have just rolled on and rolled on and rolled on and rolled on. And all of a sudden, the original 30-year loan term, as 15 years has gone by, and all of a sudden, the remaining loan term of that facility is the remaining 15 years. Well, obviously, because the amount of time that you have to repay a particular amount of money is a substantial factor in how much that commitment is, on a monthly basis. If we look to extend that loan term out to a fresh 30-year loan term through the purpose of either an internal or an external refinance, so that means either we refinance it internally with the existing bank or we go and deal with a new bank to take over with a fresh loan completely. Well, the reality is if you took that loan term from 15 years to 30 years, you have obviously doubled the loan term, but as a result of that, typically you would have halved the commitment as well. And that means that half of that commitment, that monthly payment, is now available to be able to service new debt. And as a result of that, you will be able to achieve a higher overall additional lending outcome than you otherwise would, or without making these changes. Now, I'm sure all of you are sitting there thinking, but wait, Andrew, that means that if I double my loan term, I won't actually pay that loan off, for now 30 years, where I would have paid that loan off in 15 years. And that is absolutely true if you only made the minimum repayment. So what I would say to you is, generally speaking, assuming you have a variable rate or even on quite a few fixed rates, you absolutely have the option to make additional loan repayments. And you would certainly probably choose to do that. If you didn't need that extra cash flow for your own living expenses, you would choose to make additional repayments and make sure that you're paying that loan off in the original loan term that you were comfortable with and all of that as well by making additional payments. The interesting thing about it is that making the additional repayments is choice, whereas the bank, for the purposes of serviceability, are using the base or expected repayment that is happening every month. So in other words, you kind of get the best of all of the worlds here. Your commitment is as low as possible on that loan for the purposes of additional borrowing, but at the same time, you have the flexibility of paying that loan off in the original loan term that was planned anyway. So look, I appreciate I've probably jumped into a little bit of detail there, but I think that's a really good example of what I'm talking about here. There are absolutely conscious ways that you can improve and reduce all of your existing commitments on all of your loan facilities. And the cumulative effect of that can absolutely add up to quite a significant amount of money for your overall borrowing situation. Now, why banks keep this secret from you is, again, I said at the very start that this is a lot of work without a lot of outcome. So if you think about it, if we go through the internal refinance process with them, at the end of the day, you still owe them the same amount of money, right? And it's still at the same interest rate or a similar interest rate. Nothing really has changed. They've had to do a whole bunch of work and all of the benefit has been to you, where really they don't make any money and nothing's really changed for them. So the truth is they're not going to come to you and say, hey, customer, can we do a bunch of work for not a lot of benefit, but it's going to benefit you, but you didn't know about it. So, they're never going to come to you and tell you all about this. So look, the reality is that was just loan term that I was talking about there, and before I said, loan amounts, redraw, interest rates can be an advantage for you both on the existing commitment, but also obviously if you get a better interest rate, you're paying less as well, so that's a double advantage. There are lots of little incremental things here that can be done to make a real difference. What I would absolutely say to you is, of course, you need a good set of eyes on this. You need the right professional support. And as usual, the entire WiZDOM professional team are here to support not just that, but your entire property journey. These are all the little things we do to drive material differences, in outcomes for all of our clients. And again, if you didn't know about this or you weren't looking for this, you would never even understand, how much of a material difference you can make. So please, if you feel like there's some advantage that can be driven here, or there's, some better outcomes that can be driven, please reach out to us and make sure that we can connect you with the appropriate WiZDOM professional that's local to you. Hopefully, again, that's been helpful, a little bit of an insight into all the little tricks and tips that we've learned along the way. And again, I hope that's really helpful to you. And until next time, thank you, thanks for your attention, and goodbye.